Don't assume central banks are stupid. That's a lesson I've learned. Assume that they know what they've got to do. If the game is we need to roll $10 trillion of debt this year, and the Europeans have to, and the Chinese have to, and the Japanese have to, and everybody else, the best single thing would be to lock that in for another 4 years at the lowest possible rates. So it's kind of like maybe there is a game here, which is to undershoot. I've observed that they're all in cahoots with each other, all of the central banks, plus all of the government. I kind of think if they're doing it late, they're doing it on purpose because they're not stupid. They can see the same models. What? My work is better than all of the people at the Fed? No, they're choosing to do it for a reason.
Earlier today, Bitcoin prices dropped below $58,000 for the first time in 2 months, dropping to a low of $57,166, according to data from CoinMarketCap. The sell-off followed signs of activity on wallets belonging to defunct crypto exchange Mt. Gox and the German Federal Criminal Police Office moving about $175 million worth of Bitcoin to crypto exchanges, Coinbase and Kraken, and over-the-counter desks. Late last month, the defunct exchange's rehabilitation trustee announced it would start distributing assets stolen in the 2014 hack. The announcement, which was made on the exchange's website, also revealed that the payments would be made in Bitcoin and Bitcoin Cash, and analysts warned that this could cause some selling pressure in both cryptocurrencies, even if only temporarily. Data from blockchain analytics firm Arkham revealed that Mt. Gox conducted test transactions earlier today, moving about $25 worth of Bitcoin across 3 transactions to different wallets. According to the firm, this test might signify an intention to start the redistribution process, as entities with large crypto holdings are known to conduct similar tests with insignificant amounts before making larger transfers. This news has caused a bit of turbulence in the cryptocurrency markets. The CMC Crypto Fear and Greed Index has fallen to 45, its lowest point in 2024, and the overall crypto market cap is also at multi-month lows. Amidst the turbulence and sell-off, Real Vision founder and CEO Raoul has given his updated outlook and expectations for the cryptocurrency market in 2024 and beyond. According to Pal, a missing detail most investors are not paying attention to is global liquidity conditions. In a recent discussion with Blockworks Macro, the renowned business executive and macro analyst explains that liquidity is a major part of every crypto bull market, and we are just at the point where liquidity conditions are expected to begin to improve significantly, causing an immediate response in asset prices. While Pal expects most asset classes to perform well over the next 12 to 18 months, he predicts that cryptocurrencies and digital assets will easily outperform them all. Pal is predicting the injection of massive liquidity from central banks around the world in the coming weeks, and he says that will lead us into the much-anticipated banana zone. As we bring you clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and greatly contributes to the channel's growth. Thanks, and enjoy the video.
As I've been talking about for a while, I think we're in that transition from macro crypto spring into macro crypto summer. Now, people confuse it with the actual season itself. I just saw that on Twitter. I'm like, no. It's because it breaks down to 4 periods of the liquidity cycle that drives assets. So the transition here is usually when the forces are still disinflationary and growth is slow to picking up. That is like macro utopia. Why? Because that tends to push the central banks into adding liquidity and the governments to adding liquidity. It also happens to be this everything code cycle is also about the election cycle. And guess what politicians do at this time as well? They want to give candy to the kids. So they're stimulating as well and tend to stimulate into the following year as well. So that particular juncture of the macro starting to pick up, the ISM survey is still below 50. So it's still sluggish. The forward-looking indicators are all very positive and liquidity has been positive for a while. That pickup, if you think of it, we've had a Wall Street recovery, which is liquidity. Main Street recovery is yet to happen. Main Street is when earnings go up and all of our earnings go up and there's a bit more money around. That's when the flows from all of these earnings start going into markets as well. So it's not just liquidity and debasement driving things. It gets driven by actual investment money, which has been actually quite lacking in many respects. So that's typical of the crypto summer. So the crypto summer starts around now. It also forms the basis of the banana zone. And that's when things start to get really crazy. If we go back and look at all of these, since about 2008, they've all done roughly the same thing, which is presidential election cycle. It kind of has a sell-off into the summer, then it tends to accelerate sideways over the election because everyone doesn't know what it means, and then it's all over, markets rip, whatever the outcome. A shock, expected result doesn't matter. And so that election cycle has been very prevalent both in equities and in crypto. So that's where we are in the cycle now. So we're just in that zone of, we've got this beautiful chart pattern that is just consolidating. The stuff that has less network traction or network adoption has fallen significantly, but we're starting to see the recovery. So I think it's only a matter of time now before we start to see the next move. And that's also likely to coincide with some other liquidity things. I think the Japanese have to intervene with the blessing of the Fed, because that's going to help the Chinese, the Japanese, everybody's business cycle. That has to come because the US dollar is far too strong for this point in the cycle. The other thing that needs to happen alongside that is the Fed absolutely have to cut. And I saw you talking on Twitter today. Look, inflation, the true inflation numbers at 1.82. Core CPI is now headed lower sharply, but rates are at 5.5. It makes no sense considering the lag that it has. If not, they're going to undershoot inflation, which I don't think they mind, because you can refi debt at lower levels because they put everything at the short end right now. Janet Yellen's been issuing short end debt, so the lower she gets rates down, the more she can get back into the 4-year cycle. The Fed only operate on two things: unemployment and inflation. Both of those lag the business cycle itself. So unemployment, owner equivalent rents, part of CPI, which is the large part of it, all of that stuff lags by 15 to 18 months. So even where the ISM today is bottoming, that means that doesn't bottom until next year sometime, which is why the Fed are always cutting into the second year, because they're following the lagging indicators, the things that drive down CPI, which is why they're always late tightening.
Powell is confident that the only reason the Fed remains hawkish is the lagging indicators the central bank uses. He cites the example of unemployment, which he says lags by about 12 months. According to recent reports, first-time applications for U.S. unemployment benefits drifted higher in June, and the number of people on jobless rolls rose further, indicating a gradual cooling in the labor market. This, in addition to lowering inflation data, is keeping the markets hopeful that the Fed will start cutting rates this year, maybe even as soon as September. According to Joe McCann, the founder, CEO, and CIO of Asymmetric, a crypto-focused hedge fund, it would not be completely surprising for the central bank to announce an emergency 25 to 50 basis points rate cut during the next FOMC meeting between July 30th and 31. If unemployment and other indicators worsen or improve further before then, the markets will be equally as hopeful, and prices will improve significantly. Let's get back to Powell's interview as he speaks further about the cryptocurrency industry and the $100 trillion opportunity it presents.
What we've got here is a global utility, which is blockchain, much like the internet was. Now, unlike any of these global utility networks, trains, road systems, all of this, you couldn't invest in them. But because this is tokenized, you've got a behavioral incentive system to grow the network, which is the more people come onto the network, the more the number go up, the more people come on the network. And therefore, the more capital in the network, the more applications get built, the more the network gets used, right? It's genius. And we've never seen anything like this where we're all part of it. So here we've got this asset class, which is a globally homogenous asset, which doesn't exist. Gold is the only one, but gold, if you go to a village in India, the bid offer spread is 50%. Here we've got tradable on a mobile phone in India, the Philippines, Fiji, New York, Vancouver, the Cayman Islands, the same thing. And it happens to be the infrastructure layer to the internet for the system, for value and storage. And it's that distributed database, which is a public service utility good. Okay, brilliant. It's a $2.5 trillion market cap today. If we just extrapolate out the trend rate of growth, it gets to $100 trillion by about 2032. Okay, so this is the biggest wealth generating opportunity in all human history. So you've got this in front of you, which is this whole how to my future. Part of it is this. The other thing is don't this up. Never get thrown off this horse, because this is the one. This is the big one. This is the greatest macro gift of all time to get everybody out of this shit that they're in. So it's there in front of you. So then people are like, yeah, but what do I invest in? I'm like, okay, listen, detune all the noise. There's a bunch of decentralized businesses that sell block space. And they all have different types of block space. One's going, hey, mine's the most secure and the oldest. Somebody else is like, well, mine's the internet computer. And somebody's like, mine's the internet computer, but faster. They're just selling block space. So there's a bunch of companies selling block space or applications on top of that block space. That's all the space is. It's just a technology and it's an adoption. So our job within this is now not get philosophical and tribal about where do I invest in that technology and screw it up. Our job is to maximize the opportunity to the best we can. And that's a balance of how do you take risk? Because a lot of people go, max 10 risk. Like, no.
Yeah.
Look, if it's going for 2.5 trillion to 100 trillion, you don't need to take max risk. You can just capture the bulk and then do a bit of the tail on the side. This is a narrative-driven attention space. And so they just want what they can do. I made it very clear all the way through, hey, 90% of my liquid net worth is basically allocated right now to Solana. I moved some from ETH. I don't have much Bitcoin right now. Doesn't mean I don't like Bitcoin. I just think the others go up more. Simple as that. I own a bunch of high-end NFTs that I think I have another thesis about. And then beyond that, I do a bit of speculation and other stuff for the fun of it. But the time horizon thing is, I can see it freaks everybody out. And I've stepped back, and it was only in the last 2 weeks I've realized the risk, the real thing that's going on crypto Twitter, and why the banana zone resonates and why you get this backlash is this is everybody's hopes and dreams. It's everybody. It's yours, it's mine, it's everybody's. Right? So they're so scared of it going wrong, yet they're so greedy to get it right. This is the struggle that everybody's having. And people have PTSD from the last cycle, as the people did from the previous cycle. Right? The previous cycle was the blow off top and then the collapse. This one was the stunted top and then the collapse. And so now people, they worry about the cycle. Mm-hmm. I don't remember Jeff Bezos caring about the business cycle. He just owned his stock.
In other news, the International Monetary Fund has advised that the Fed keep rates at current levels until at least late 2024 and bolster its fiscal position by reducing spending and raising revenues. IMF Managing Director Kristalina Georgieva said this last week while speaking in Washington, D.C. "We expect core PCE inflation to end this year around 2.5%, she began, and be back to target by mid-2025. This being said, we do recognize there are important upside risks to this path. Given those risks, we agreed that the Fed should keep policy rates at current level until at least late 2024. It should be noted that the IMF had previously warned that the Fed's wrecking ball would negatively impact other economies around the world. What do you think about the sudden reversal? And when do you think the Fed is most likely to start cutting rates? Please drop your replies, as well as comments on Pal's interview, in the comments section below. Also, ensure you give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.